Welcome to the Ellsworth Advisors monthly update for May 2026. I'm Kelly Keenan. This is Cameron Mealy. Today we'll talk about the latest economic news and also discuss how things went in May and year to date and how we kind of see things going for the next couple months. Cam, kick us off with the latest economic news.
Thank you, Kelly. Good afternoon, everybody. Hope everybody is well out there. By reference, today is Tuesday, June 2nd. We've got our normal numbers we're going to run through, but I think biggest piece of news that we saw over the last couple of weeks was Kevin Warsh has been officially named the 17th chairman of the Federal Reserve, and that was on May 22nd. Now, obviously, Jerome Powell is going to stay on as a Fed governor, but he will no longer be chairman. But obviously, Jerome Powell is going to have a big presence in the room. I mean, the biggest thing about Kevin Warsh is he is a hawk, which means that he wants to keep rates low, really wants that pro-growth kind of push, which we've seen is really a focus of the Trump administration. But as we're going to get into the numbers, they really don't support any sort of rate cuts at this point.
Yeah, if we want to dig into it a little bit from at least what we know of Kevin Warsh, probably his thoughts are more around a little bit of restructuring of the Fed, going back to more of a pre-financial crisis look.
The historical, the legacy Fed.
The balance sheets.
Yes.
He's going to try and shrink the balance sheet. On the rate side of things, I think Trump's goal was to find somebody who would cut rates. But based on what's going on,
you just can't do it based on these numbers.
I don't see it happening. I don't think he's going to bend to that.
Yeah.
And new risks have evolved or have surfaced at this point. Cam, kicks off some economic stuff.
Well, and the one other thing I will say is when we look at the kind of the strength of the overall economy, the S&P 500 earnings overall are up 28.4% for the first quarter. That's companies that have already announced and estimated results. This is the fastest earnings growth since the fourth quarter of 2021. So corporate profits continue to look very strong. Now, on all the other facets of the economy, we are seeing some weakness. So let's jump into GDP. On May 28th, the Bureau of Economic Analysis reported that according to its second estimate, GDP in the first quarter increased at an annualized rate of 1.6%. This is down from the 2% annualized rate that was reported in April as the Bureau of Economic Analysis advance rate. As we always talk about, 2% is kind of a normalized annualized growth rate. We're looking for GDP. Obviously, 1.6 would be a little bit on the softer side. Now, you got to counter that 1.6 with the Atlanta Fed's GDP Now forecast model. As of yesterday, June 1st, the Atlanta Fed's GDP Now forecast model is predicting second quarter GDP will increase at an annualized rate of 3%. So obviously that is pretty strong growth. As we talked about last month, we're also seeing the consensus Wall Street estimate for second quarter GDP growth is only 1.75%. So Atlanta Fed, they are updating it as new information comes in, where a lot of these consensus estimates were more static. So, we're certainly going to see either the Atlanta Fed's going to come down to where the consensus is, or the consensus takers are going to start raising their rates, because we've got a disparity there. And as we get through the second quarter, as we get through this month, we'll start seeing that range tighten up. Inflation is certainly back, as Kelly mentioned. We're now seeing inflationary pressure in gas, groceries, electricity, electronics, and software. Let's look at the Producer Price Index. On May 13th, the Bureau of Labor Statistics reported that the Producer Price Index increased 1.4% in April. On a year-over-year basis, the index is up 6%. This is the largest 12-month increase since moving up 6.4% in December of 2022. The Personal Consumption Expenditures Index. On May 28th, the Bureau of Economic Analysis reported the Personal Consumption Expenditure Index increased 0.7% in March. And for the 12 months ending March, the index is up 3.5%. Last major inflationary number, the Consumer Price Index. On May 12th, the Bureau of Labor Statistics reported that the Consumer Price Index increased 0.4% in April. On a year-over-year basis, that index is up 3.8%. Last piece of news, we will get the May jobs report this upcoming Friday, June 5th. But looking at the current Wall Street consensus, we're looking at about 150,000 non-farm payroll jobs being added in the month of May, with the unemployment rates holding steady. So jobs still look good, not great, not soft as we thought. Everybody thought it was going to start softening. But the inflation, whether it's the energy complex because of the war in Iran, global instability. Let's face it, I think we've all gotten used to prices edging up after COVID. I think people have accepted that. I think producers are pushing as many price increases as they can. And I think consumers right now it's hurting. They have accepted it. But we're obviously, I'm not going to say a breaking point, but inflation is hot again.
Yeah, it's hot. I think, energy driving a big portion of that, but that's definitely trickling through to the rest of the economy. Employment.
In energy, energy has its fingers in everything.
Absolutely. And the positive side of that is especially for the consumer, the percentage of household income spent on gasoline and heating, natural gas or oil is a lot less than it was in the past. Yeah. And the fact that we are energy independent, we have a lot more control over that side of the equation. But we are definitely seeing, a shift in the economy. Productivity obviously is going through the roof. That's why the earnings have been so good. Earnings growth has been so good because of productivity.
Companies are doing more with less.
Yeah. Is that directly related to AI? Probably, or just people knowing that if I don't increase my productivity, I will get replaced by AI. Potentially. I think that's part of it. You have a changing workforce. Skills required are changing. I think you have a lack of more skilled labor than what we've had in the past. So you have a lack of that, which pushes up wages from that end of the spectrum. So a lot of shifting happening.
Well, and we don't have relief for lower paying jobs with immigrant workforce that we've had in the past.
Immigration has definitely put a lid on that.
Yeah.
But the other side of the less immigration is also being reflected in housing, and rent costs are coming down because demand for rentals has gone down. So that helps housing costs, which is good for younger people trying to buy houses, but for older people selling houses, not so good.
Yeah.
So a lot of shifting going on in the economy. Inflation is probably, very concerning. Our thoughts have been, we're going to be in that 3 to 4% range for a while. And, it's starting to play out. We're starting to see a little bit of a second wave after the high inflation after 2000, after COVID. You had high inflation, it came down. Now it's ramping up a little bit again. That's fairly typical. That's kind of what happens. The trend doesn't continue. So there's definitely the challenges out there in the economy. And, when we start looking at the markets, which I'll jump into right now, in the stock market is kind of telling a story of things aren't so bad. That's for sure. In May, the aggregate bond index up 0.3 to 0.43. I'm sorry. But in the stock market, the S&P 500 for the month up 6.35. The NASDAQ for the month up 9.4. The Dow Jones Industrial Average for the month up 4.6. Russell 2000, which is small caps, up 6.68. The international market measured by the EAFE up 4.61. Emerging markets up 8.48. So pretty robust month of May. April was good. Another rebound month in May, and good earnings. That's being reflected in these numbers for the month of May. Year to date, that takes the bond index up only 0.38, and that's because interest rates on the higher end have remained elevated. We're looking at a 10-year at 4.4. We were starting to flirt with 4.8 a couple of weeks ago or last week. I think those long-term rates are going to kind of stay where they're at, which also means mortgages are going to kind of stay where they're at. I think mortgages are kind of in a range that we're going to be stuck with for a while. Let's see, S&P 500 for the year to date up 11.27. The NASDAQ year to date up 16.33. The Dow Jones Industrial Average only up 6.86. The Russell 2000 up 18.15. The EAFE International Markets up 9.74, and emerging markets off to a really good start, 25.74%. So, markets are doing strong. Definitely you're seeing a little bit of more aggressive tilt with tech leading the charge.
Everybody loves tech once. Everybody loves tech once again.
definitely S&P getting pretty concentrated in technology, even exceeding the levels we saw maybe a year ago or 2 years ago. So, that's getting into pretty heightened territory that gives me some concerns. We're looking at that in the portfolios as, maybe making sure we're tempering some of our exposure there. And with the actual portfolios, growth with income portfolio, which is really our balanced portfolio, obviously a little bit more defensive. For the month, only up 0.3%. Year to date, still up 9%. Gainers in there, Apple up 15%, Nucor up 11%, Honda up 11%, and Nvidia up 6%. Laggards in May, Pepsi down 9%, ExxonMobil down 6%, Digital Realty down 5.5%, EOG Resources down 5%. So kind of seeing a little relief in energy as well. Ongoing talks have shown some promise. Who knows? But that's given the energy
Well,
complex
in
a
that
little bit of
in that
relief on oil prices.
in that portfolio too, everybody should understand when you say that's our balanced portfolio, all the other portfolios we list off, those are pure equity portfolios. This is the one portfolio where you have fixed income, you have commodity, you have gold exposure. So we would not expect that to perform at the same level that we would a pure equity portfolio.
Not when a market's rolling. That's where it's not going to keep up to a pure stock portfolio. Dividend yield portfolio. Once again, this is all stocks. These are defensive companies, high dividend yielding, good balance sheets. But once again, that's not what was working.
You're not going to hear these names on CNBC.
Down one. Well, you do.
I know.
Down 1% in May. Year to date still up 8%. In May, Cisco is up 31%. Packaging Corp of America up 3%. Laggards, Pepsi again down 9%. Medtronic down 9%. American Electric Power down 7%. Bristol Myers down 5%. Chevron down 5%. Pharmaceuticals again beat up a little bit more recently. Year to date, Cisco up 56%. Altria up 20%. Chevron up 19%. Public Storage up 17%. Enterprise Products up 14%. Kind of the big laggards so far this year. Medtronic down 23%, and Old Republic up down 13%. Our appreciation with income portfolio, nice month up 4%, year to date up 11%. Gainers in there for the month. Lam Research up 23%, Eli Lilly up 18%. That kind of bucks the pharmaceutical trend. Freeport McMoran up 13%. Goldman Sachs up 11%. Microsoft up 10%. Laggards for the month. Eaton Corp down 7%. Costco down 5%. EOG down 5%. Energy Transfer down 5%, Kinder Morgan down 5%. A little bit of trend there with our energy complex. Year to date, Lam Research still leading the pack, up 86%. Broadcom up 29%. Freeport McMoran up 29%. EOG up 27%, even after giving up 5%. Eaton Corp up 25%. Laggards for the year, Thermo Fisher down 15%. Microsoft down 7% year to date. And Meta down 4% year to date. So not all tech is work. Software was challenged a little bit in May, that's for sure. Price potential. This portfolio is knocking the cover off the ball. For May, up 8%. Year to date, up 37%. So we have some hot stocks in there. For May, Dell was up a mere 101% from the time we started holding it. AMD up 46%. Marvell up 24%. Sanmia up 19%, Nven up 17%. So that definitely drove portfolio returns. Laggards, Petro Brazil down 14%, Jones Lang LaSalle down 11%, Ontario Resources down 9%, Technip FMC up 9%. Year to date, big gainers get Dell, we're up about 234% in there since we bought it. Marvell up 141% since we bought it. AMD up 141%, Sam Nino up 73%, Petro Brazil up 58%. Laggards, we still own the portfolio. Once again, Microsoft down 7%, Meta down 4% year to date. Our small cap portfolio for May, good month, up 5.5%. Year to date, up 17%. So these are all small caps. Not quite as aggressive as the index, but still holding in there pretty well. Big gainers, Movado up 40%, Black Sky Technology up 30%, 36%, Bright Spring Health up 28%, V2K up 22%. So in Astronomics up 22%. Immunovant up 22%. So good things happening in that arena. Laggers, NAPCO down 19%, which we did walk away from it. PK Technologies down 14%. Matthews International down 7%. Big gainers that we still have in the portfolio: Black Sky up 158%, Spire Therapeutics up 124%, Lincoln Education up 92%, Bright Spring 65%, Astronics up 60%. What we're still holding the portfolio that's down: NAPCO down 10%, actually, which we walked away from the other day, and then Redimed down 6%. So we're off to a good start this year. I expect some bumps along the way during the summer.
Definitely.
Summer can get a little janky during the summer. I think historically the new Fed presidents, our Fed chairs, are typically tested a little bit by the markets. What that means,
We
who
shall
knows?
see.
But Wersch has, I'd say, some decisions to make, and may have to buck what the president wants to have happen. But hopefully he makes the right decisions. And then we have a midterm election, which usually brings some volatility. So
We have a midterm election that's going to cause volatility. And then obviously what everybody is talking about now is Anthropic has filed with the Securities and Exchange Commission to go public. We know that SpaceX plans to go public. These are obviously going to be two of the biggest IPOs in the history. They're going to be talked about ad nauseum.
yes,
We've had lots of clients ask about both. And what I think Kelly and I are comfortable saying is all the money that's going to be made on these stocks at the IPO are by people who are insiders, people that are venture capital firms, people that have already invested. Buying a heavy, hot tech stock at the IPO is fraught with risks. We've seen it with a lot of the heavy tech companies like Facebook, like Meta. There's a strong bump as all the retails get in, and then within 3 to 6 months, the insiders can sell, and they sell heavily, and you see the stock go down. So Anthropic is an amazing business.
Yeah.
SpaceX, we're still figuring out because there's limited to what they can do because we're not yet ready to power Mars and colonize Mars. So Anthropic is a really, really cool company. The valuation is going to be off the charts. Retail consumers, like all of us, don't know anything that the insiders don't know. So buying at the IPO is fraught with risks. If we see the stock pull back after the IPO and get to a normal valuation, normalized valuation, we'd be happy to jump in because it's a great company, but we're very leery about trying to buy at the IPO.
I'm going out on a limb. I'll make a prediction that after the IPO, if we like what's going on with the companies, there will be a point within the first, 3, 6, 12 months where we'll be able to buy it a lot cheaper than we would have been able to pick up on the IPO. That, like I said, I'm very comfortable making that prediction, and if we like what we're seeing, we'll end up buying them later on down the road. It is going to be a challenging environment, but it's definitely an environment we can handle. We can invest through it. You have a lot of richness in the tech stocks. So, are we going to see a big crash in tech someday? But who knows when? And, we'll be prepared for it. But also there's going to be plenty of different ways where we can find returns. Companies are making profits. They're making money. They're growing. And, we're looking at everything, not just one industry. And that's kind of going to be the key moving forward. We have good commodity exposure. We're not long rates. So I think we're in a really good spot for the potential environment we're moving into.
Yep. And obviously, if you've been checking your portfolios, our portfolios have done really well, especially over the last 12 months. So with that, hope you have a great month. We will talk to you again in July. Obviously, if you have any questions, please feel free to reach out to us. And as always, we value you as our clients and the trust you've placed in us. Thank you very much.
Thank you.